Good morning, Black America. Grand Rising, beloved. I'm Crypto Stock Markets, and here's what's moving the market today. Let's deal in facts. U.S. job growth just recorded the weakest non-recession year since 2003. Hiring momentum is slowing. When hiring slows, wage pressure cools. When wages cool, spending cools. 70% of the U.S. GDP is consumer spending. Slow the consumer, demand weakens. Inflation falls when demand weakens. The Federal Reserve keep rates high to slow demand. If demand is already cooling, the Fed doesn't need to stay aggressive. That shift rate expectations. Markets price expectations, not today's rate. If traders believe the Fed chair pivots sooner, liquidity expectations adjust immediately. Liquidity drives Bitcoin, not headlines. Liquidity. Now positioning, Standard Chartered is modeling Bitcoin near 50,000 and ETH near 1,400 in a rebound structure. That's a liquidity-based reprice model. They're mapping where capital rotates if easing probability rises. Institutions move on probability shifts. When labor softens and inflation cools together, easing odds increase. When easing odds increase, capital positions early. That's the mechanism. Now, infrastructure with names. Coinbase launched AI agent wallets with built-in guardrails. AI systems can now hold crypto and execute transactions directly on chain. That means algorithms can deploy capital without waiting for human approval. Automation already dominates equities. Now it has direct blockchain access. Execution speed increases. Reaction windows shrink. Volatility spikes get sharper. If you trade emotionally, you get punished faster. Now regulation. The White House held a stablecoin meeting. It ended without an agreement. That means no finalized federal framework yet. Stablecoins like USDC and USDT are the settlement rails of crypto markets. No clarity limits, institutional capital size, clarity increases scale because compliance friction drops. And while policy negotiate, institutions execute. BlackRock's tokenized Treasury fund, BUIDL, is now available on Uniswap. BlackRock, Uniswap, on-chain, that removes traditional clearing layers. That reduces settlement time. That increases capital efficiency. Capital efficiency increases participation. Participation increases depth. That is infrastructure embedded into finance, and infrastructure does not reverse once embedded. Now let's talk about how we move inside this structure. AI wallets are not cosmetic. When Coinbase enables AI agents to hold and transact on chain, automated systems can scan order books continuously, monitor liquidity depth, detect arbitrage gaps between centralized and decentralized exchanges, execute the moment inefficiencies appear, rebalance capital across protocols when yield shifts. Humans cannot compete with continuous data execution. That changes short-term behavior. Liquidity sweeps happen faster. Wick recoveries happen faster. Stop clusters get triggered faster. AI systems detect concentrated liquidity. They detect retail stop density. They detect thin books, and they execute immediately. So what do, we adjust. We stop placing obvious stop zones in obvious zones. We define invalidation before entry. We stop reacting to emotional spikes. We plan entries around liquidity levels, not inside volatility. Now be clear, AI does not control consensus. Validators secure blocks, but AI controls capital deployment. Capital deployment determines short-term velocity. If yield changes, AI reallocates instantly. If funding flips, AI rebalances instantly. If volatility expands, hedging triggers instantly. Lag used to be an edge, now lag is a liability, so we widen time horizons. Macro positioning still works. Liquidity cycles still matter. If labor weakens and inflation cools together, easing probability rises. That benefits risk assets over months, not minutes. AI compresses short-term volatility. It does not cancel macro cycles. Now add institutional integration. BlackRock trading this tokenized Treasury fund bill on Uniswap means settlement is happening through smart contracts, not clearing desks. That reduces settlement time. That increases capital rotation speed. Faster rotation accelerates momentum phases. It also accelerates reversals. So risk control becomes mandatory. Now stablecoins and federal legislation finalize compliance, clarity increases. Clarity increases capital size. Capital size increases depth. Depth stabilizes long-term structure. Until clarity arrives, institutions operate in partial scale. So volatility persists. Here's the rule set. track labor data, track inflation, monitor stablecoin legislation, watch institutional on-chain settlement, trade with structure, define entries, define invalidation, define allocation size, no emotional scalping, no blind leverage. AI has compressed reaction windows, so we prepare before moves. We do not react after. Discipline is edge, preparation is edge, macro awareness is edge. That's how we stay 2 steps ahead. I'm Crypto Stock Markets, keeping you 2 steps ahead of the market on Good Morning Black America.